Okay, everybody, here we go. It's me, Gregory Mannarino. Sunday, March 5th, 2023. You know something? I'm in a really good mood today. I'm tired, but I don't know. Just something struck me this morning, and I'm like, despite what we're seeing, despite what's going on, we got to keep our chin up. We got to realize that every day above ground is pretty much a good day. Anyway, let's talk about what's happening, where we've been, and where we are going. So this is again my newest segment of Markets a Look Ahead. I have like 2 pages of things I want to cover with you. I don't know if I'm going to get to all of it, but we'll try to put some of this into perspective. Let's start off with this market just real quick. So there's a lot of euphoria, and I've heard from a lot of you over the weekend about this market capitulating. Big rally in the market on Friday. I'm sorry to those of you that believe that this market has just capitulated. I don't even know what you're looking at. I'll be honest with you. I have no idea what you are looking at. For those of you that believe that this market just capitulated and we are going to see this market rip higher, please give me your reasons why. I mean, other than the fact, we have one, well, I guess, element here that just came to light. I covered this Friday. Let's talk about that. And maybe this is where some of you are at here. Look, I have been called every name under the sun, including a perma bull, a perma bear, and everything else in between. I look at the debt market, as you all know, as the main number one driver of this market. However, let's cover what happened on Friday. We found out on Friday that central banks, this is unreal, but it is real, have pumped this market with $1 trillion just since the first of this year. Today being March 5th, $1 trillion just to try to prop up this stock market. Maybe that's what some of you are looking at here. But I'm going to tell you something. I'm going to let you in on a big secret here. Despite this monumental sum, $1 trillion pumped into the market since the first of this year. Let me show you something. I don't know if you can make this out here, but you see that underline thing? My handwriting is terrible. Okay, what that says is debt market instability is a major underlined. Clearly have this. There is a global sell-off in the debt market. Okay. Forget about 1 trillion. We're talking about multiple trillions of dollars bleeding out of the global debt market. So maybe this $1 trillion that has been pumped into the market by central banks since the first of this year is like a Band-Aid effect. And let's put that into perspective too. Okay. In the last lovely 10 trading days, this market has been higher, or the S&P 500 has been higher, only 3 out of 10 days. So I'm not saying again that this whole thing is about to melt down, and it certainly may be, but what does it all depend on? Action in the debt market, period. And we still have what I would say is an enormous amount of instability. How do we know that we have an enormous amount of instability here in the debt market, which is insolvent, which is illiquid, and no matter how much cash they pump into it, it can never be enough? Well, we're seeing a lot of fluctuation here with regard to the U.S. 10-year yield, the benchmark. Okay, so with that said, this instability here in the market, in the debt market more specifically, has caused this stock market to gyrate, has caused this stock market to sell off. For the most part, since the MMRI, Mannarino Market Risk Indicator, free to you, free to me, free to everybody, link in the description of this video, crossed 250. Now here's another surprise for you. You may be surprised. I don't think so, but the MMRI remains over 250. So I really, look, I'm willing to learn, okay, honestly. But for those of you that have written to me, and I got a ton of emails about this just looking at it this morning, that this market has capitulated, what are you looking at? Please enlighten me as to what you are looking at, because I do not see a capitulation. I see central banks that are pumping the market with $1 trillion worth of stimulus, okay, if you want to call it that, since the first of this month, despite the fact that they're tightening monetary policy, because they want to control inflation. Oh yeah, they're raising rates and it's really working. How about no? That's something else we need to talk about here, looking forward here. But with regard to this market, people, look, I don't know another way to say this. You and me, I don't think we have to guess anymore. In my opinion, we have the number one greatest tool that has ever been thought of in the history of the world to gauge risk in this market. We know where the red lines in the sand are. I'm talking about the MMRI. First line in the sand, 250. Next line in the sand is 300. Could you wow. If we break 300, this market is... it's going to be in some other place. And I think that's pretty easy to understand. Now, a lot of you, again, going back to my emails, I read my emails and I read through the comments too, are asking about my list of commodities, commodity exchange traded funds. And as you all know, if you've been following this blog for any length of time, I believe commodities are the place to be moving forward. Why? There's multiple reasons why here. Again, it's how cash moves through the markets. Eventually, a meltdown in the debt market is going to occur. That's going to destroy world stock markets. Cash is going to move. It's going to move into commodities and in my opinion, I believe, cryptocurrencies. Okay, you're allowed to, you have your own opinion on it and whatever you want, but I'm just telling you my take on it. Now, for those of you that want to see my ETF list, which I put out at least two in my free newsletter, again, link in the description of this video, I'm going to post it again in my newsletter. As soon as I finish this video, I'm going to repost that. So for those of you that do subscribe to my free newsletter, be sure to check your inbox, your email box. You'll get it right to you. All right. So with that said, let us move forward. And I want to talk about what has been transpiring over the last several weeks. And again, none of what I'm going to cover here is going to be a surprise to you. And what I can tell you is everything we're going to talk about, this is going to get worse. Let's start off with this. Okay, what are we finding out? That inflation continues to rise with no end in sight. Does that sound familiar to you? Because I've explained and we have discussed right here in this blog that since central banks started raising rates, we discussed how it wouldn't work. It would never work. It's not meant to work. Okay. We also said, we discussed it right here, that this phenomenon of rising inflation would continue to rise with no end in sight, and that's exactly where we are. So on the back of that, we found out, again, just last week, that real wages, that is what people are earning, weighed against rising inflation, which is not transitory, never was transitory, they knew it, was never temporary, that was another lie, peaking multiple times, it never peaked, sticky, and whatever the word they want to use, it's all a farce. It's all a distraction. It's a deception being propagated by the mainstream propaganda ministries, and this is part of their scheme. The level of deceptions and lies and distractions and look here, don't look over there, that's going to get much larger. You can expect propaganda to go off the Richter scale moving forward to keep people dumbed down, to not actually know what's happening. But you follow this blog, so well, I think you're ahead of the curve. But real wages are cratering. Meanwhile, what did we hear? What did we hear last week out of the mouth of one of the other its? I'm talking about Neil Kashkari, Fed President Neil Kashkari, more than likely going to soon to be the new Fed vice chair. Could be wrong on this, but I think he's the number one contender right now for that position. This man, Neil Kashkari, said that you are earning too much money. He isn't the only one. There was another Fed president, I don't know who it was, Daly or one of these other freaks over there, said that people are earning too much money. And the only way to control inflation is to prevent this from happening, from people from, and they also said that people need to lose their jobs. Why not start off with theirs? Can you imagine a situation here where Fed presidents dictate your life? They can tell you when you are earning too much money. Meanwhile, they're loving their multi-six-figure salaries. Oh, it's lovely for them. How about if you earn that, they would tell you, oh, no, you're earning way too much money. But why is it okay for them? Anyone feel like commenting? How about, I'm telling you, I've been saying this since like forever now. How about they lose their jobs first? We don't need these freaks. We don't need a central bank to run the system. Okay, this was supposed to be a government of the people, by the people, for the people. How can we have that when we have the entire world financial system itself which includes the economy, and the financial markets, and the entire financial system itself run by central banks. Can't happen. You understand? All right. Anyway, so real wages falling off of a cliff. Fed president is telling you that you're earning too much money. Inflation continues to outpace any forecast. I want you to think about this. This is laughable too. How is it? Explain this to Greg Mannarino, because maybe Greg Mannarino is not too bright. How is it that you and I have discussed right here, I don't know how many times, that inflation will continue to rise regardless of what they're saying? But why is it, in your opinion, again, I want to hear from you, that what we're seeing now with regard to global inflation has now outpaced every single prediction by every single central banker around the world? Why is that? Is it because we're smarter than they are? I don't think so. It's because they're lying to you. And all they're doing is lying to you. There's no accountability. Where's the outcry from our so-called representatives? Okay? Why isn't anyone being held to account? Why don't you let me in on that too? Because again, Greg Mannarino is not too bright. Let us move forward. Here's something else that you knew was going to happen, and it's starting to pick up. More corporate layoffs. Thousands, tens of thousands. Just wait to what's coming down the pike here. Waves and waves and waves of more people being laid off, and I hope that's not you. Another thing we need to pay attention to, the world economy, people, continues to contract at its fastest pace ever. Ever. Where's the outcry? What's driving this? It's central banks pushing the global economy off of a cliff, taking the population with it. What are they doing? They're on a mission to destroy the global economy, to wipe out an entire class of people here, introduce a new feudal system, extreme haves, extreme have-nots. You know all this. It's all happening right before our eyes. But again, this is accelerating. Let us move forward here. Home affordability. We just found this out last week at a new all-time record low. That plays right into what we just spoke about. The new feudal system. You will own nothing and you will eat the bugs. You know what I'm talking about. One of my favorite posters here. One of my favorite people who constantly comment here. Eat the bugs. I love it, bro. I love it. I want to show you something else I wrote down here, and I alluded to this earlier. Commodities, commodities, commodities. Yes, that's where we need to be. Again, my two favorite of all time, right here. You want to see my favorite of all time? Right here. Okay, it doesn't have to be a fancy designer one. One of my lovely followers sent me that. It could be kind of an off-brand one. Do I have an off-brand one laying around here? Yeah, maybe something like this. You know, no specific names on these things, or something like this. I got them all over the place here. I want to see something cool. Let me show you this. This is you're gonna love this here. This was sent to me by Dan allegedly. Look at that. That's his face. He's a great guy. Anyway, let us move forward here, my lovely friends here. That's about all I want to cover here this morning before this video gets too long and people complain. People complain about the length of my videos. Okay. To those people that complain, I said, just watch half. What can I tell you? Anyway, look, as usual, I think we have summed everything up here. Now let's look over at this market. Where's the market going? Do we really have to guess here? Here is the element of, I guess, where we need to speculate. Okay, we understand that central banks have pumped this market with $1 trillion since the first of this year. I don't think this is a surprise to anyone because we've discussed right here on this blog, what do central banks do? They buy the market. Although the Federal Reserve will swear up and down, backwards and sideways that they do not buy the stock market. When the Federal Reserve, any member of the Federal Reserve comes out and tells you something, I'm getting lines here across my face, aren't I? Hold on a moment. Let me see if I can fix that. Lovely. It's the blinds here. When any member of the Federal Reserve or the Federal Reserve itself tells you one thing, you know the polar opposite is true. Now, what the Federal Reserve and other central banks around the world do is they buy large cap companies. The large cap companies have the potential to move the markets. So they get in here, and not only are they buying all the debt, not only are they issuing one debt through one door and then buying it back through another door, a system of a revolving door which is massively inflationary. And this is the mechanism how they're destroying their currencies as well, none more so than the Federal Reserve sucking the purchasing power out of it. but that's just how they prop up the market. Okay, they're obviously buying large cap stocks, and that's what's going on. The last, again, 10 days, trading days, we've had 3 positive days. And as I started off this video with, look, I am not too old yet to learn a new trick. For those of you that believe that this market has capitulated, and I got a bunch of emails about this, why? Please explain to me why you believe this market has just capitulated, because frankly, I do not see it. Unless you're factoring in, again, central banks buying the market even more so, which is obviously a distinct possibility, because this market has no connection to reality. Okay, it continues to defy gravity. Why? Well, the central banks are buying. But in my opinion, and again, this is just my opinion, the instability that we're seeing in the debt market can potentially get way out of hand really fast. And again, this is not by accident. This is by design. Central banks understand, just like you and I, that the entire debt market is insolvent. It's completely liquid. And no matter how much debt they pump into the system, it can never be enough. It's too big. And $1 trillion here or $2 trillion there ain't going to make a difference, really, in the longer run. They can prop it up and they can push off the eventual meltdown in the debt market, probably for a little while longer, but they can't prevent it forever. It is the biggest bubble in the history of the financial world, and it has created distortions across the spectrum of asset classes. There's no price discovery anymore behind anything. I think that's pretty evident. All right, people, look, again, this video is getting awfully long. I love all of you from the heart. I mean that. Thank you to those of you that support my work. I can't tell you how much it means to me. It really does. It makes me feel like I'm doing a good job. It really does. All right, so with that said, I'm going to let you go. Please comment. I asked a bunch of questions here. I will read them. I will see you tomorrow morning for my usual pre-market report, and that's going to be fantastic as well, just because we're together. If for no other freaking reason, honestly, I love being with all of you. And I really do enjoy doing the live streams, although there's a lot of people that don't like them. I don't know why. Greg, I'm not watching your videos anymore because of the live stream. I don't understand why. Okay, you don't have to watch them live. You can watch them when they replay. I'm not going to stop doing the live streams because too many of you seem to really enjoy them. And I love interacting with all of you. I really, really do. I can answer your questions in real time and talk about whatever the heck you want to talk about. I love that too. Again, you don't have to just stick to this market. We could talk about hairdos, dogs, whatever the freak out you want to talk about, right? Love you a lot. See you in the morning.